fuck it, I'm gonna give away the exact blueprint that anyone can use to finally quit their job and actually become a full-time trader. Now, if you would like this game plan a little bit more personalized to yourself, you can go down to the description and apply for the Master of Coin Mentorship program. But with no further ado, let's get right into the video. I know it may seem like a daunting task, especially for those who've been trading for a while now and still haven't got their first payout. After today, you're gonna know exactly what you can do so you can finally be on track to getting your first payout and actually quitting your job. Step 1, you need to know your freedom number. Essentially, your freedom number is all of your necessary expenses on a month-to-month basis added up. I'm talking about actual needs, not, for example, you and the boys going out on Sunday. Look, that's not a necessity. I'm talking things like your rent, your mortgage, your food, your utilities like gas, electric, internet, your gym, your car payments, fuel. Before you watch any more of this video, I want you to pause, sit down and actually calculate all of your monthly expenses and write that down. So once you've got that freedom number, and let's say, for example, $3,000, what you need to do is move on to step 2. And step 2 is now building your emergency fund. Essentially, your emergency fund is that freedom number, so all of your monthly expenses, now multiply that by 6. That's going to be 6 months of our expenses actually saved up. If there's a month where maybe we're not profitable or something just unforeseen happens, we know that we're going to be comfortable and fine for the next 6 months. Because remember, with trading, there's no guaranteed income every single month. But once we've got that emergency fund, that safety net, it completely takes all of that pressure away from us. Now imagine you're in drawdown in your account 5%, maybe even 6, 7, 8%, and you've quit your job. You've got no regular income coming in and your bills are due next week. You've got your rent, your car payment. Well, that's going to create a really stressful trading environment and make it so much harder for you to actually go in and profit. Because when you've got all these other external pressures, it starts to cause emotional trading. And your emotions, they're going to cloud your judgment and literally change your perception of the market. So you're going to be taking loads of trades that are not even meeting your plan, and all of a sudden you're probably going to lose the account. Make sure that you've got that 6 months of expenses put away. So if anything ever happens and you have a losing week or a losing month, you're not going to be stressed out because you've got all of those expenses saved up and you've got that cushion of your safety net. Now, step 3, we need to actually acquire this emergency fund. And no, this is not you saving up from your job. No, I'm talking about 6 months of payouts from your funded account or your live trading account. If you're sitting there thinking, well, Kieran, I don't have a live account or I'm not even funded, don't worry, we'll move on to that in a minute. But how can you go and quit your job if you don't have those 6 months of expenses or any sort of track record of payouts? Don't worry about rushing the process. Look, the market's not going anywhere. But how do we actually go in and get these payouts, build up that emergency fund towards the freedom number? And that's now step 4, capital allocation. Well, we firstly need to know what is our minimum trading account balance for us to actually go full time and match our monthly expenses. For example, if we calculated that all of your monthly expenses are $3,000, your monthly expenses should never exceed more than 2% of your entire trading account balance. In this industry, it's just filled of unrealistic expectations, where you're seeing all these social media gurus making 20, 40, 50, a million% a month, and you're sitting there thinking, whoa, I need to match that. But in reality, professional traders, we're happy with 2, 3, 4, even 5% a month. So remember, we need our monthly expenses not to exceed more than 2% of our entire trading account balance. Let's say your freedom number is £3,000 a month and you need £3,000 a month to cover all those expenses. Well, if we do some quick maths, if you've now got a £200,000 account and you're making 2% a month, you'd be making £4,000 a month. And withdrawing that 2% would put you over that freedom number. So now you can use that 4K a month, that 2% on your account, to start building up and saving towards that emergency fund. I can't stress this enough. That emergency fund needs to come from those trading payouts, because if you're saving up from a job, well, that's going to be completely different because you don't have the real life experience of actually trading your system. And that's now where we're going to move on to step 5, which is capital acquisition and actually getting this money. Look, you might be like me and be like, Kieran, I ain't got 200K. You might not even have 100K. You might not even have $100. Neither did I. But here's exactly what you're going to do to actually acquire this capital. Firstly, build a track record. I know it sounds a little bit counterintuitive, but the money will come very easily when you've actually got experience trading your system and build a legitimate track record based on data. I'm not talking about 1, 2, 3, or 4 take profits. I'm talking a minimum of 6 months of a track record with at least 100 trades. Because once you've got that, you're going to know the expectations of your system. You'll know your win rate, your losing rate. You'll know what it's like to go through a losing streak. So imagine you're this type of trader where you've been trading a strategy for a month, you might have got funded, you get a payout. What's going to happen when those bills come and your account's now sitting in drawdown, where maybe you're down 3, 4, 5%. And now you've got your bills coming out next week. And you're sitting there thinking, damn, I got to play some trades. I got to make some money to pay these bills next week. But remember, with trading, there's no guarantee of your income. And all of a sudden, you're going to go on that losing streak because your emotions are going to go crazy. And you're even in a worse drawdown. You might even blow the account. And now your bills are not going to get paid. This is why we need to have that emergency fund and also have the track record. If you actually have a track record now and you've gone, for example, 6 months, 100 plus trades, and you know your system, you know that you're profitable over time, you're not going to be stressing about a few losing trades because, again, you know the expectations of your system. And I can't stress this enough. Like, don't rush when it comes to these funded accounts or rush when it quits your job. I think that's the biggest problem people face in trading because they've got these unrealistic goals of, oh, after 6 months or a week or a month or just any amount of short time, they think they'll be a full-time trader. But remember, this is a profession, just like any other profession. If you want to be a doctor, it takes what? 3, 4, 5, 7, maybe even 10 years to actually get that medical degree and become a licensed doctor. Why do you think trading the world's largest financial markets are any different? Oh yeah, because the guy on Instagram said you can make $1 million next week. Have those realistic expectations and actually focus on the skill set. But imagine this. Imagine having over 6 months of experience with your system and over 100 trades in your arsenal that actually prove your profitability. You're going to be feeling way more relaxed, way more calm, way more confident. Because you've already been through these situations. You've already built a track record with your strategy and you understand the expectations of your system because you've already been there, you've done that, you've worn the hat and got the t-shirt. Because once you actually got this track record, passing a challenge is not going to be a challenge. It's just going to be a natural byproduct of you trading your plan and managing your risk. How do we actually go about building this track record? That's now where we move on to step 6, building the track record. And here's what I did to build mine. I found a person who had the exact results I wanted, and I literally just copied their strategy word for word. Don't go and try and reinvent the wheel, because how can you trade a strategy if you're not profitable? Find someone who's got the results you want, do what they do, and you will have what they have. After I started to learn their strategy and actually began to apply it, I was then sending them my work to actually get feedback, because if you're not getting feedback, how would you know you're applying it correctly? When you actually start to learn this strategy, send your charts to your mentor, get feedback to ensure you're actually applying it correctly. Otherwise, if you're not getting that feedback and you're not getting it actually marked up, how do you know you're applying it correctly? Spend less time actually hunting for trades and continue to develop your psychology, your journaling, and your fundamental analysis rather than your trading plan and trying to constantly take trades. Trading is a game of leverage, not a game of effort. The more you do doesn't mean the more you're going to get in these markets. You can literally spend 10 hours on the charts and lose money, or spend 5 minutes on the charts and make someone's monthly or even yearly salary. Remember, it's leverage, it's about quality, not quantity. And instead of sitting on the markets for 10 hours a day, set your alerts, wait for price to come to your zones, and whilst it's coming to your zones, you might be waiting minutes, hours, maybe days or weeks, depends on the type of trader you are, but use that time to actually go in and sharpen your sword. Work on your mindset, work on your belief system, work on your emotions and your trading psychology. Go in and look at your trades, look at your losers and figure out, why do I keep losing trades? And spend time paying attention to the actual market facts, such as the economics and the fundamentals that actually drive price. What you want to do is take 20 trades at a time and keep each entry criteria the exact same. And then once you get to the end of that 20 trade sample size, go back and look at the reasons why you lose and the reasons why you win. Because you'll be able to go in and look at those commonalities and figure out, what is the biggest cause of all of my losing trades? Because if you're taking 20 trades and let's say you're losing 12, you're going to find that there's a commonality, because we humans are creatures of habit. There'll be a commonality between those losers. For example, if you find that you keep losing when you trade counter trend, well, stop trading counter trend and do a new sample size to compare the data. And if you find that changing that one thing increases your win rate, increases your profitability, well, stick to that for your new sample size. But on the other hand, if you find that it's worse, well, go back to what was working better before. And then the next thing you want to do is focus on the right daily methods of operation. So what do I mean about the right daily methods of operation? You see, remember, you cannot control when you get these results, but you can control what you do on a day-to-day basis that are going to contribute towards the results. On a day-to-day basis, make it a habit to get feedback from your mentor. Send him your charts, send him your analysis, ask him questions so you can get real-time feedback to make sure you're actually on the right track and not just repeating the wrong things. Make sure you keep a diary of your trades. Journal your entire thought process from your emotions, your thoughts, and exactly why you're picking these different levels. Journal every single trade before and after. And go back every single day to look at the markets and see, were there any trades that you missed today that you should have caught? And if you missed them, again, figure out why you missed them and what you can do moving forward to make sure that mistake doesn't happen again. Also take some time to work on your psychology every single day, because your income is a direct reflection of your level of personal development. And again, our income will never exceed that level of personal development. So if you want to start to make more, we're gonna have to become more. So focus on your personal development every single day. Make sure you're up to date with the current economics of the market. If you don't know what Jerome Powell said in the last FOMC meeting, how are you even going to the markets and trying to trade? If you don't know what the current interest rates are, you don't know what the GDP is, the inflation rates, why are you even trading? Remember, this is a business, not a hobby. And if you want a business to pay you like a business, you've got to treat it like one. Now, look, we cannot control when we're going to get funded or when we've got that track record, but we can control what we do on a day-to-day basis. And over time, if we're doing the right actions, inevitably the right results are going to follow up. It's like if you want to gain weight, you just got to eat more. If you want to lose weight, eat less. And eventually, look, overnight, of course, you're not going to, get a six-pack after one night. But if you do it for weeks on a period of time, it's going to actually show up. It's the same thing when you're trading. Don't rush this. Make sure you're focusing on the right inputs on a day-to-day basis, and the right outputs will follow eventually. So remember, every single day, spend time learning about the emotional nature of trading. Work on your psychology, collect data, and research the fundamentals. Do those end-of-day markups where you're reviewing yesterday's price action to see if there's any trades you could have taken or missed out on. Keep a diary of your entire thought process, looking at all of your markets and only taking trades when it actually presents itself. All right, constantly get feedback from your mentor. And by doing this on a day-to-day basis, you can now use those payouts to build up that 6 months of expenses, build up that emergency fund, and now you'll be able to actually quit your job. Before you do, make sure you know these numbers and you actually have experience trading your system for a period of time. Because here's the thing, when I quit my job, right, I was only spending a few hours a day on the charts. And then now I had all this time available to me. So what I started to do was spend way more time on the charts. And I found that more time on the charts caused me to overtrade. And I was taking way more losses, and my trading actually went downhill after I quit my job. And it was because I was now spending more time on the charts that I didn't need to. So also calculate how much time you spend on the charts a day. If you're now spending 2 to 3 hours a day on the charts before you quit your job, when you quit your job, why do you now need to spend 10 hours a day on the charts? It doesn't make sense. So know how much time you need to spend on the markets, schedule that in like a business. Your trading should also have hours of operation as well. And then in your free time, now you can go and do the activities and the things that you actually want to and don't need to be a slave to the markets. So before you go and quit your job, don't rush. The market's not going anywhere. Make sure you spend time actually learning the skill sets. You stay patient, you stay disciplined, and I promise you the gains, they will come. And if you did enjoy this video, go down to the comments, let me know one thing you liked, one thing you learned, and one thing you want to see next. And with that being said, I'll see you all at the top, from the top, because you already know, man, that bottom is way too crowded. Sheesh.